Let's also get a perspective from Dinanath Dubhashi of L&T Finance on really, some of those moves or that package to really ease things with regards to NBFCs, that sector. Will it help to revive things and what the outlook is going forward? Dinanath, thanks so much for joining us. Now, given the kind of steps that were announced in the budget, including the RBI getting regulatory powers for HFCs, tax relief on NPAs for NBFCs, how positive are the overall announcements according to you for the sector?
I think in one word, obviously they are extremely positive, but I would like to put in, two time frames. The NBFC sector needed two things. One is the immediate liquidity boost, the sector as a whole, and second is long-term confidence. And I think the most positive thing of the budget is the budget addresses this, both the ends of the spectrum. So obviously the guarantee that the government has announced and the immediate RBI announcement for additional liquidity to banks to fund NBFCs and HFCs will go a long way in addressing the immediate liquidity constraints or immediate lack of limits or confidence of banks to lend to NBFCs. So that will be addressed immediately. It will definitely help highly rated NBFCs who look at securitization. I have still not looked at the ratings. I expect it to be sort of AA and above maybe. And of course, all the AAA companies like we are, definitely it will benefit tremendously. But much more than that are the structural announcements which are done. The intent of bringing the tax parity or the income recognition on NPAs parity based along with banks. So this is what the sector was asking for a long time. That while NPA parity has come with banks, these kind of parities were not there. So this parity of NBFCs with banks is very positive. And then saying that giving RBI more powers to supervise and regulate NBFCs. We of course don't know the details, but more regulation, more powers, as the recent circulars of CRO, liquidity or asset stress recognition have shown that more regulation always brings more confidence. And today what the sector needs is confidence. And RBI getting more powers, and I already think RBI has enough powers, but we don't know the details of this. But more regulation, more power is always better for keeping the sector confident and keeping the investors confident about the sector. We always believe that sudden growth and then big shocks is never good for the sector. Good regulated performance is always good, and this long-term measure and long-term directional measure is what I think is most positive.
Fair enough. So, Mr. Dubhashi, you've already stated that the RBI is getting regulatory powers over NBFCs, which is a positive. What do you think are the immediate steps that the RBI should take in order to address the liquidity as well as regulatory issues?
So liquidity, I think just as we speak, RBI has already taken that. Definitely RBI is providing additional window of some 1,34,000 crores to banks for funding liquidity, and coming within a few hours of the budget. This was of course expected after the monetary policy speech of the governor, but this announcement coming immediately after the budget shows that the direction is towards providing immediate liquidity to NBFCs. So that step is, as I said, immediately positive. As far as what more regulations can come, we don't know. It is too early to say that. But let us look at the direction of regulations which have come in the last 1 month, right? And putting the CRO as an independent CRO as compulsory for larger NBFCs, or making very clear how to manage short-term liquidity or liquidity coverage ratio for long-term for the stronger and bigger NBFCs. These are, of course, this liquidity is not regulation as of now. It's only a paper for discussion, and it will soon come in regulation. So these are very, very positive directions, both on the structure of the NBFC and the CRO is structural improvement. Liquidity is on the liability side improvement, and of course we believe that the new June 7th, I think, the circular of talking about asset classification and dealing with stressed asset, in which NBFC is being treated on par with banks for the first time. The previous circular, which was challenged in the Supreme Court, didn't have NBFCs in that. Here NBFCs being there, we think all these regulations which are already come are very positive.
Now, the finance minister gave a liquidity relief fundamentally sound NBFCs. There's also that clear distinction between the sound NBFCs and those that are not sound. So how do you see the overall environment developing for the not so sound NBFCs? Because that's where the concern lies.
Very sure. I mean, while the FM wants to help the NBFC sector, she definitely doesn't want to burden the banking sector with bad assets. I mean, you can't create another problem while solving one problem. And hence, very clearly what Madam has said is this facility, this one-time facility for 6 months, which is an extremely needed and positive step, is available only to good assets of financially sound NBFCs. I mean, she is the FM and she definitely cares about the banking sector, and she is going by the sound principles of lending. So while going and helping the sector, you obviously have to take care of the credit and the health of banking balance sheets. And she has achieved that and very clearly differentiated well-managed, sound, financially sound, good parentage NBFCs, which should be encouraged, right? See, we have to differentiate profitability and, whether the NBFC is sound and feasible from liquidity. Liquidity is a temporary problem, and while addressing liquidity, banks should not end up funding NBFCs which are basically not sound. And that's what she is doing, and I think it's a very good step, positive step.
Sure. So several announcements, of course, for deepening bond markets as well. The finance minister is announcing measures to attract foreign investment in Indian debt markets, steps on the sovereign bond side, proposals for allowing AA bonds as collateral. How positive are some of these steps for the markets and therefore for the NBFC sector?
Great, and this is the time I will also talk about little bit about our kind of companies, which are AAA and supported by large groups, right? So let us take a few steps back and see that government and RBI and government wants to deepen the debt market, especially the long-term debt market, because essentially why this liquidity crisis happened for some companies is because the long-term debt market is not deep enough, and you have to deepen and expand the long-term debt market. That is the first objective. These are long-term objectives, okay? I'm not talking about short-term a little bit. Second is as this banks limits on various large groups, etc., come into picture. Good, big, large and strong companies should be encouraged to directly approach the market and more proportion of their borrowing directly coming from market rather than through banks as intermediaries. Now, if these two are largely positive directions for the economy and for the strong people of the strong participants in the corporate market to take, then corporate bonds as an investment or as a traded instrument needs to be encouraged. And each of these steps, whether it is encouraging FPIs to invest, whether it is even allowing FPI investment in infrastructure debt fund to be sold and traded to domestic players before the lock-in period, or whether it is corporate debt being allowed to use as collateral for liquidity. I think each of these steps were steps that the industry had recommended and has been a demand for quite some time, will of course provide short-term relief or short-term avenue of, in the short term. I don't mean short term, I mean long-term funds, but in the short term will help. But more importantly, once again, it is bringing around, it is perhaps the first step in making the structural change, a long-term structural change in the debt market in the country.
Okay, we've already seen bond yields easing nearly 15 basis points post the budget. So do you see greater monetary transmission now post the event from banks to NBFCs actually improving? Will the cost of borrowing for NBFCs come down?
Transmission of interest cost cuts has nothing to do with the budget, right? I mean, transmission depends on the cost of funds of the bank, and every monetary, the benchmark rate cut definitely reduces the bank cost, but the bank has other costs also to think of. Some of the banks have already passed some part of it passed on through the interest rate cuts, started doing that already. I don't see the budget as a step in to increasing transmission. It's not about interest rates. Interest rates are done through monitoring policy by RBI. It's not the function of the union budget. The union budget makes structural changes, and that's where we see this budget taking very strong steps.
Now, given the fact that the finance minister announced various steps to boost affordable housing, MSMEs, SMEs, the rural sector, etc., how positive are these announcements for these sectors? Do you think that it'll actually help to spur rural demand and thereby pick up overall consumption growth?
All are very positive. So as I said, MSME, of course, MSME we don't have at this point of time a big presence, but we are planning. I mean, we announced during our annual results that the next product that we will be launching will be SME loans, and hence it is very positive for the future. But yes, the boost in housing sector is definitely very positive. Agri, even though there are no direct benefits for a tractor or something like that, but a lot of announcements in the rural sector, etc., rural businesses, and a large allocation for rural roads will be positive for rural India. And yeah, overall it is positive. Of course, the rural demand will largely depend on how the monsoon. A positive, definitely. How positive, we will know only say after another 1 month of monsoon, seeing how it progresses.
All right, we'll leave it there. Thanks so much for joining us this morning, Mr. Dubhashi. Okay.